Well, oh boy, the cruise line stocks are really starting to sink. Recently, Carnival Cruise Lines, ticker symbol CCL, reported their Q2 2020 earnings. And man, they are just bad. I thought they would be bad, but man, I did not think they were going to be this bad. They are just terrible. They are bad. We all expected it to be bad with this once in 100 year event that is massively affecting all cruise line companies around the world. Obviously, worldwide pandemic, you're not allowed to go on a cruise. Companies that profit from you going on a cruise aren't going to profit anymore. And when you are a cruise line company, when you're actually the company that owns those boats, you aren't going to be making any money. And Carnival Cruise Lines is arguably the biggest player in this area. And if they're doing bad, hint they are, I'm going to show you today in this video. Do you think the little guys aren't? Yeah, no, they're doing terrible. Today in this video I'm going to do a pretty in-depth analysis of Carnival's second quarter 2020 earnings report. We're going to see how they did. I'm going to give my opinions on whether Carnival Cruise Line or any of these cruise line stocks are a buy right now. So just before we do get into the video, guys, obviously hit the like button like always, it helps me out. Make sure to hit the subscribe button to continue watching my content and be notified when I post new videos. But for now, let's just get straight into this earnings analysis. I'm going to be honest, reading over CCL's Q2 numbers, it really hurts to see. Revenue, analysts expected $1.13 billion for the quarter. The actual number was $700 million. So we can obviously see a massive bad surprise there, and it gets worse. Now, earnings per share estimates from analysts were at around about $1.56 minus, so $1.56 loss per share. So yeah, expected a $1.56 loss per share, but we can see that came in at a whopping $3.30 per share loss. Ow, that is massive losses right there. Just some really bad numbers for Carnival Cruise Line there. And it really just shows how bad of a situation they are in right now and how much risk does come with these cruise line stocks right now. But if we have a look at the year-over-year numbers, they are just worse, to be honest. Q2 last year, Carnival were earning 66 cents per share, where right now, like we know, like I just said, they lost $3.30 per share this current quarter, or this last quarter that just went. Year-over-year revenue is down 85%. Now, like I said, I expected this to be bad, but I didn't expect it to be this bad. So revenue this quarter last year was at $4.8 billion. Now it's all the way down at the $700 million, like we said. But if we're talking bottom line, net income, that number is also very bad. Quarter 2 last year, net income was sitting at $451 million. Not bad money to be making in one quarter, but Q2 this year, it's terrible. This year, second quarter, they had a net loss of $4.4 billion. Billion with a B. These guys right now are just bleeding money, and like I said, it is very worrying for Carnival. It does show that the balance sheet is something that you really need to keep an eye on when investing in a business or when running one, obviously. Because yeah, with the good times like Carnival's seen, they've had plenty of good times before. All this debt that they've taken on isn't really going to matter. But when you get a once in 100 year event, and so all of a sudden no one can go on cruises, then this is going to be a big problem here for you, like we can see. In the good times, all is good and well, and you can continue to service this debt through your current operations. But if something were to happen, or something were to shift massively where there is a massive change in demand for cruise lines, like right now, and all of a sudden the money isn't coming in, then you're going to be having some serious problems. And it's gotten to the point where Carnival has had to sell off some of its ships. They are selling off 6 ships here, which is also a very worrying sign. We can see that these guys are just bleeding money right now. It would normally cost them about $1 million a month to operate these ships when they do have them in full operation, but now that they're all docked, it is still costing them quite a bit, still costing them $250 million a month. Still a lot, obviously not a lot as before, but still just a massive amount to be bleeding each and every single month when you've got no money coming in. Now, they did say that they already had plans to sell 6 of their ships, but they're just having to do it quicker than expected here now. Yeah, right, whatever. Either way, whether you think that they're telling the truth or not, it is still a bad sign that they're having to sell 6 of their ships, especially right now. And this statement from Carnival just says it all. The company expects to resume guest operations after collaboration with both governments and health authorities in a phased manner, with specific ships and brands returning to service over time to provide its guests with enjoyable vacation experiences. The company anticipates that initial sailings will be from a select number of easily accessible home ports. The company expects future capacity to be moderated by the phased re-entry of its ships, the removal of capacity from its fleet, and delays in new ship deliveries. Yeah, what do I think of that? Them trying to be positive there? No. Like, guys, there's still no confirmed dates on when these guys are going to be able to get back to business, and definitely no confirmed dates at all when they're going to be back at full operating capacity, and as many people want to take cruises as they used to. It's definitely a very scary situation for these guys. So what do I think? Is CCL stock a buy? Well, as I said, I think CCL is just in a very bad position right now, and the chance of them going under at this point, it does honestly look pretty scary. This ship may be finally sinking. It is a very, very risky play. Maybe something this risky, if you bought back in when they were down at around about $8, I would say yeah, potentially. But at the current share price, the upside here, the money to be earned, does not outweigh the downside. There's just a massive risk involved in this stock right now, and it's very well possible that you could lose all of your money very easily. Just with those terrible earnings, no exact date that these guys are going to be back up and running like normal, let alone to full potential. They're having to sell ships off as well, and recently just had to take out massive debt at very high interest rates there as well, just to get them through. I really don't think CCL is a buy right now. It's just too risky and it's too scary. It would be like gambling at this point if you were to put money into this stock. So CCL is a no-go from me right now. I am not buying it and I don't hold any shares at all. But I hope you guys did enjoy this video or analysis of CCL and their latest earnings report. If you did, as always, please hit the like button there. Click the circle to subscribe and check out the video and playlist here. But that's all I have for today, guys. You have a good one.